Okay, so let's dive into this, because it's a classic financial puzzle. You've got a banking giant, Bradesco, that posts these incredible profits, the kind that should have Wall Street throwing a party. But instead, investors got nervous. So why? Well, that's the billion-dollar question we're going to unpack right now.
So, picture this. February 6th, 2026. The Brazilian banking giant Banco Bradesco drops its full-year results for 2025. And on the surface, the numbers look absolutely fantastic. It really painted a picture of a healthy, growing bank that was just firing on all cylinders.
I mean, just take their recurring net income, which is a really key way to measure a bank's consistent profitability. It jumped by a whopping 26.1%. A number like that should have sent the stock price into orbit.
But yeah, that's not what happened at all. Instead of a celebration, the bank's plans for the next year were met with, well, a lot of caution, even some real disappointment. You could almost feel the market collectively pump the brakes, wondering what was really going on under the hood. And this is where we get to the heart of the matter, this real contradiction. On one side, you have undeniable success, and on the other, this growing wave of anxiety.
So you've got this amazing report card for 2025, right? Profits are way up, their return on equity is strong, their loan book grew by 11%, everything's pointing up. But then you look at their guidance for the future, and investors got spooked. They started getting worried about near-term pressure and, here's the big one, those rising costs.
Okay, so to really get what's going on here, you have to look beyond just these numbers on a page. The real story, the reason for all this nervousness, is this absolutely massive transformation plan that Bradesco is in the middle of.
And when I say massive, I mean it. This isn't just some minor tweak or a little course correction. Nope, we're talking a fundamental, ground-up overhaul of their entire strategy. A plan so big, they've given themselves up to 5 years to pull it off. And the CEO, Marcelo Noronha, he basically came right out and said it. He's like, look, these great 2025 results, they didn't just fall out of the sky. He's making it crystal clear that this success is the direct result of their hard work on this new long-term plan. So what's in this grand plan? Well, it really boils down to 3 key things. First, a radical shift to get their retail customers banking digitally. Second, they're going hard after more affluent, high-income clients. And third, they want to totally dominate the market for small and medium-sized businesses. And you know what? It's already starting to work. Just look at the digital side. They've managed to move a staggering 19 million clients over to a fully digital banking experience. 19 million. And the payoff for that is just huge. Think about it. By getting those folks online, they slash the cost to serve each one of them by a factor of 40. That's not just an improvement. That is a complete game changer for how their retail business operates. And it's not just digital. They've been flexing their muscles in that super important small and medium business space, too. They grew their market share to 16.6%, really cementing themselves as the leader there. Okay, but here's the catch. A transformation this huge, well, it doesn't come cheap. And that brings us right back to the twist in the story, the very thing that's making the market so nervous.
Because while those profits were climbing, something else was climbing right along with them. Costs. The bank's operating expenses shot up by 8.5%. And for an investor, a number like that is like a flashing red light on the dashboard.
So you gotta ask, right? Where is all this money going? Is this just bad management and inefficiency, or is it something else? And when you actually break it down, the answer is pretty revealing. So your normal day-to-day costs, admin stuff, personnel, that grew by about 5%, which is pretty much in line with inflation. No big deal there. But then you look at technology investment. That skyrocketed by 22%. That is where the money is going. And this isn't some budget screw-up. It's not a bug. It's a feature. This was a very deliberate, very strategic decision to pour a ton of cash into technology and AI. They're paying the price now to build the bank of the future. And this huge spend on tech isn't just about getting faster computers or a fancier website. No, this goes way deeper. It's about completely rewriting the company's DNA to create what the CEO calls an AI-first bank. Yeah, the leadership here is being crystal clear. The CEO even repeated it for emphasis. For us, our culture is AI first. AI first. That's not just corporate jargon. That is a mission statement. They're saying AI isn't just a department, it's the new core of their entire culture.
So what does AI first actually mean in practice? It means you use AI for pretty much everything, from making internal processes more efficient to creating these super personalized services for customers. A perfect example is their AI assistant, BI.
And you can see how the strategy plays out. Cause and effect. Step 1, invest. They jacked up tech spending by 22%. Step 2, build. That money allowed them to literally triple their ability to create and launch new apps. And step 3, deliver. What's the result? Well, their AI assistant, BI, now successfully handles and resolves 90% of digital service calls without a human ever getting involved. That's a massive win.
So when you put all of this together, what do you get? What's the big takeaway here? It's that Bradesco is making a huge multi-billion-dollar bet on itself.
What they're doing is trading guaranteed, easy profits in the short term for what they believe will be total tech-driven dominance in the long term. They're willing to take the heat from the market right now because they're absolutely convinced this is what it takes to build a smarter, faster, AI-powered bank for the future.
And so that leaves us with the big multi-billion-dollar question, doesn't it? Bradesco is playing the long game here, but is it the right game? Will this massive bet on technology and AI completely redefine banking in Brazil, or will it be a costly misstep?
It's an incredibly bold move from a financial giant like this. It's them planting a flag and saying, we believe the future of banking isn't being written in old-school ledgers. It's being written in code.